There's a lot going on in the world right now. You might be wondering, are these major events which are unfolding, will they impact the price of silver? Will they impact the price of gold and the precious metal mining stocks? Yes, they will. We buy those vehicles to provide ourselves with protection against economic calamity. And I have 9 key stories. They're very interesting stories, and they're very scary stories that very much point to the fact that the world economy is starting to fall apart. We need to look at those stories, and we need to do that right now. Number 1 of 9. If you live in the United States of America, congratulations! Your fine government just surpassed $31 trillion in national debt. That equals $95,000 in debt for every living U.S. citizen. But if you work, your share of the national debt is almost $250,000. Think about this. If you work and you make $50,000 a year in the United States of America, you would have to work for 5 years just to pay off your portion of the debt that's owed to people throughout the world. And number 2, we have a potential for a world banking collapse on our hands. Many people are saying that Deutsche Bank and Credit Suisse are on the brink of collapse. Their stock prices have been decimated over the last 5 to 10 years. To put things in perspective, and I know this can be a little complicated, I have a degree in accounting from a prestigious university, and this is even complicated and a little confusing to me. Lehman Brothers, in 2008, during the great financial crisis, when they went belly up, they were managing about $600 million in assets. When you combine the assets being managed by Deutsche Bank and Credit Suisse, it comes to almost $3 trillion. That's 5 times higher. So it's not a stretch to see that if one or both of those banks were to go belly up, it would create massive shockwaves throughout the world economy and financial system, and we know what that would do for the price of silver and gold. And just one more small point on this complicated, confusing banking stuff. Then everything else will be much more easier to understand. I promise you. When we look at the United States, the situation is even more astounding. Derivative exposure by our big banks. We're talking tens of trillions of dollars, but what are derivatives? They're basically agreements that the banks make with themselves to insure each other that if certain loans or certain other types of products go bad, the one bank will cover the other bank. They have this amazing, complicated spider web of financial obligations amongst themselves. And if it's like a Jenga board, if one of the bricks comes out and it starts to fall, the whole thing can fall apart. Let me just briefly read to you the exposure that a few of the big banks have in the United States. JP Morgan, $57 trillion of exposure. Goldman Sachs, $50 trillion. Citibank, $45 trillion. And finally, Bank of America has $22 trillion of exposure. And point number 3 that touches more on a human tragedy. In Bangladesh, there are 140 million people who are without electricity, a nationwide blackout. Tell me we're not having an energy crisis in this world. Tell me that we're not having our systems start to break down. 140 million people without lights. Now, I will always keep the lights on for you in Ron's Basement. You are always welcome here. We're going to get through this together. If you enjoy my content, which I put out every day, you can subscribe right here. Please give the video a thumbs up, turn on the bell notification, share it with anyone you like. Most important, leave a comment in the comment section below. Your thoughts are important. You are important. We want to get to know you and we want to learn from you. Now let's get back into the list. I screwed up the numbering on the list. So this is number 4 and 5. The World Trade Organization, the IMF, and the United Nations. All 3 of them have recently warned that the world is heading into a deep recession and a period of, listen to this, prolonged stagflation. We know that stagflation is the most fertile soil. It is the miracle-grow soil of growing the price of silver and gold and the other precious metals. Look, the three main world economic organizations, world authorities have said we are heading into hard economic times and a period of stagflation, and they blame it all on the world central banks for their aggressive monetary policy. They're calling on the world central banks to loosen things up because it's causing major issues in the world economy, in particular for the developing segments of the world. So we can see how things are getting sketchy in the world financial system, in the world economy. But let's move back to the United States and look at the results of some surveys of CEOs, where it gets very, very interesting. 400 leaders of U.S. companies were surveyed by KPMG, Pete Marwick. 91% said they see a recession coming. Only 34% thought that it would be a mild recession. That meant that 66% thought it would be a steep recession. On the mid-sized company side, 90% of the CEOs saw a recession, and interestingly, 25% of the mid-sized company CEOs said they were instituting policies to lay people off. Now think about this, guys. CEOs are paid to be optimistic, right? They are the top of the food chain. They see more data. They have access to more information than any of us. They have their finger on the pulse of what's going on. And when these supposedly optimistic people are so pessimistic, it does not spell good news for the U.S. economy, which has a major impact on the world economy. And number 7, employment. Jerome Powell and the Federal Reserve have long stood on the fact that the employment picture supposedly looks so great in the United States. That's their base from which they've been launching all this aggressive monetary policy. We got news, 2 key points on employment just this week. Job openings plummeted in August, down almost 10%. Job openings went from 11 million all the way down to 10 million. And this morning we got initial jobless claims numbers, which went up from 190,000 all the way to 220,000. Now remember, this is a key point when it comes to employment. It is very, very much a lagging indicator, meaning it takes 3 or 4 months for slowdown in the economy to be reflected accurately in the employment numbers. And I think we're starting to see hints of a slowdown right now. We're almost done. Number 8, transportation. What are we learning from the cargo, from the freight industry? Well, we're learning that trans-Pacific cargo ships have been canceling because there's no cargo to transport across the Pacific, down 75% from just 1 year ago. And interestingly, if we read between the lines, warehouse space is at a huge premium right now, meaning there's a bunch of stuff piling up in warehouses. What does that tell us about the health and vitality of the world economy? What we're seeing is that the world economy is slowing down, and that jives with number 9. Ed Yardeni, a respected Wall Street veteran, recently said that because of the slowing economy, the Fed will raise rates one more time in November and be done. See, we wanted to end on something positive. The strong U.S. dollar is creating a global financial crisis, and the Fed will soon have to reverse course. Hey, when we look at these 9 factors, put them all together, it's easy to see that this aggressive monetary policy that has been pursued by the world central banks is causing major problems in the world economy, in the world financial system. Things will have to be reversed soon. We will continue to have many crises and maybe even some large crises that will pop up. And when they reverse course, when the dollar drops from its 20-year high where it's at right now, the price of silver, the price of gold will explode. And I'll be here for you through it all. We'll have a big party when the price goes up. Happy days will be here again. Hey, if you enjoy my content, you can watch another video right here. But until next time, you, yes you, there's only one you, be well.